Google, the tech titan that's in your pocket, your car, and now your AI future. But with shares whipsawing after blockbuster earnings, is Alphabet a buy, hold, or run? In this video, I'll reveal the 5 most important things you need to know about Google stock right now. From AI bombshells to hidden valuation gems, stick around. This could supercharge your portfolio. Let's jump in. Thing 1, the recent earnings bombshell and market meltdown. First up, what just happened? On February 4th, 2026, Alphabet dropped its Q4 2025 earnings, and it was a beat across the board. Revenue hit $113.8 billion, up 18% year over year, smashing estimates. EPS 2.82, way above the 2.59 whisper. Annual revenue crossed $400 billion for the first time ever, fueled by ad dominance and cloud acceleration. But here's the twist. They forecasted 2026 capex at a jaw-dropping $175 to $185 billion. That's 50% more than Wall Street's $120 billion. Guess, all for AI, data centers, and infrastructure. Market reaction? Chaos. Shares plunged 8% after hours, then bounced, ending down around 2% at $333. Why? Investors freaked over the spending spree, fearing margin squeezes. Yet, positives abound. Waymo snagged $16 billion funding, valuing it at $126 billion, and Gemini AI hit 750 million users. Cloud deals with Liberty Global seal the growth narrative. Bottom line, short-term pain, but long-term AI gain? Thing 2, the ironclad foundations of Google's valuation and industry's harsh realities. Number 2, what's Google really worth? Valuation rests on 3 pillars. Ad empire, 90% of revenue at $350 billion plus annually. Cloud scaling to $50 billion. And moonshots like Waymo. Current metrics, PE ratio around 33 market cap. 4 trillion pricey, but justified by 15 to 20% growth forecast. DCF models peg fair value at $400 to $450 per share if AI monetizes. But zoom out to the industry. Tax physical limits are brutal. Data centers guzzle 3% of global electricity, facing energy shortages and chip supply crunches from TSMC bottlenecks. Environmental regs could cap growth with water usage for cooling sparking backlash. Industry structure? Oligopoly vibes. Google owns 90% search market, battling Microsoft in AI, cloud, Amazon in e-com ads. Business model. Free services monetized via targeted ads plus cloud subscriptions. Consequences? Antitrust headaches. Ongoing DOJ suits could force spin-offs, plus privacy erosion and ad market volatility tied to economic cycles. It's a high-margin machine, but fragile to disruption. Thing 3, business prospects, transitions, and game-changing catalysts. Thing 3, where's Google headed? Core search and YouTube thrive, but the transition is all AI, integrating Gemini into everything from search to Android. Cloud's the star, 30% plus growth, hitting profitability. Waymo's autonomous rides could add $100 billion in value alone. Other bets? Quantum computing and health tech via Verily. Catalysts? Q1 earnings in April 2026 for CapEx updates, AI product launches like Advanced Gemini 2, and regulatory wins. Key indicators: ad revenue growth, signals market health, cloud margins 10 to 15%. Target means efficiency. CapEx to revenue ratio, watch for, is less than 40% to avoid dilution. And AI user adoption, Gemini MAUs, means stickiness. These scream future dominance if they trend up. Thing 4, what the market thinks and why they're dead wrong. Fourth, market consensus, moderate buy with a $337 target, about 2% upside from $333. Why? Proven cash cow, but CapEx fears and AI competition from OpenAI and Microsoft spook them. Volatility is high post earnings, with options implying 5% swings, but consensus is wrong. Too bearish on AI ROI. They're pricing in margin erosion, ignoring how 185 B spend could double cloud revenue by 2028. Scenarios. Bull case. AI ads boost earnings 25%. Target jumps to $450. Bear, reg, delays or recession drops to $280. As new info hits, like Q1 capex efficiency, watch consensus shift bullish, especially if Trump era deregulation eases antitrust. Thing 5. Will the moat hold? And Google's true worth, finally. Thing 5. Competitive edge persisting? Heck yes. Here's the foundation. 1. Data Fortress. Trillions of queries build unbeatable AI training sets, no rival matches. 2. Scale supremacy. $400 billion revenue funds R&D. Network effects locking users across Android, YouTube, Maps. 3. Innovation engine. From Bard blunders to Gemini triumphs, Google's talent pool crushes disruptions. If this mode holds, and it will, stocks worth $450 plus per share, a 35% jump from now. Compare today's 4 trillion cap undervalues AI or cloud at just 10x forward earnings. The rating could push to 5 to 6 trillion by 2028. There you have it, the 5 must knows on Google stock.